Good morning, traders and investors. My name is Shane Mwangangi, one of the market analysts here at HFM. HFM is a multi-winning awarded broker that aims to provide for you as a trader and investor the best marketing environment and opportunities. Now, before we start, I'd like to let you know that this is a pre-recorded YouTube video. You can go to our YouTube channel and our YouTube page and make sure that you hit the like, subscribe and share button, and don't forget to hit the notification button. This will help us improve our algorithm and to create better videos for you as a trader and investor. Now, today is a big day for Euro. We have the German consumer sentiment, we have the Eurozone economic sentiment, and we have the monetary aggregates. These are big players in the market, and we may expect major moves being influenced by these big players. Moving on to the stock markets, we have the US equities, the S&P 500 and the Dow Jones. We have the S&P 500 and the Dow Jones. S&P 500. Yeah, first of all, I look at the Nasdaq 100, which is part of the 100 tech companies in the US. We can see we had a large move moving upwards for 5 days. This is a good winning streak. You have 1, 2, 3, 4, 5, and we managed to move on top of our previous resistance zone, now turned to be support. The extent of this rally is because the uptrend is fueled by a temporary reprieve on auto tariffs and anticipation of upcoming US economic data, including jobs and inflation reports, which is on Friday, where we're going to get our NFP data release. Moving on to the forex market, we have the Euro USD, which remains in a slight consolidation phase. As you can see, this is because of the awaiting economic sentiments. As we had said, we have the Eurozone economic sentiment, the monetary aggregates, and the German consumer sentiment. So as we await these sentiments, we are going. It will help us gauge future movements. Moving also to the USD, to the dollar index. We previously saw that we had an up move, a rebound higher, driven by expectation of tariff exemptions and a general improvement in risk appetite. However, though, we can see that we have a slight down move. This is influenced by underlying recession concerns, which is continuing to persist, as evidenced by market speculation on potential Federal Reserve rate cuts. Let me fix something. Nice. Then also on commodities, you can move to gold together. On commodities, you can see again tariffs have played have caused a major impact on the gold. We saw the gold moving upwards, breaking all-time highs as we have been saying, and right now we are in a 1, 2, 3, 4 going to 5-day consolidation phase. Why is this so? This is because investors and traders right now are focusing on the dollar pairs, because as they are awaiting for the major economic news, which are going to be released later this week by the Feds, and it will gauge the trajectory of major pairs, including base quote currency that has the dollar and base and quote currency that has the dollar. So you can see we're hovering around a support zone in the gold around 3270.22 and having a high of 3488.48. As you await for the economic release coming on this week, It will also, we expect it to also impact on the gold, as if you have major influence on the dollar, the gold will also have a major influence on it. So as you can see, a slight consolidation here. For scalpers and day traders, use strict risk management as you maneuver through gold, and don't forget to also have a good psychology when you are entering the markets. So with that said, I'd like to say thank you for joining in for our daily morning market call. My name is Shen Mongangi, one of the best market analysts here at HFM. With that said, goodbye and have a good trading day. Goodbye and see you tomorrow.